So in today's video, I'm going to be covering CCH, and that is Collier Creek Holdings. This is another blank check company, and they will be merging with UTZ Brands. I covered them back in June when I first heard about this, and pretty much after that initial spike in June that we see here, it's been trading sideways for months now. Pretty much in that 13.50 range to 14. They do have a meeting coming up here on August 27th, and the merger is set to go through in September. So I want to be watching this closely, and I just wanted to revisit the topic. So here is an overview of the video, and since I've already made a video on this, I'm not going to be diving as deeply, but I will talk about some brief business info, a bit of the financials and potential, some positives and risks, and then price predictions and my take since the merger is coming up. So a bit about UTZ. They are going to be going from CCH to UTZ on the New York Stock Exchange when this goes through. They are a leader in their industry, and they were founded in 1921, so they're almost 100 years old. They do have a very strong brand portfolio, and their anticipated enterprise value upon the merger will be $1.56 billion. The voting date is set on August 27th, so we will hear more about the merger date. I assume it'll be in September. And now let's talk about the CCH team. So looking over the CCH team, we have Roger DiRometti, and he has over 40 years of operational experience in the consumer goods sector, which is very impressive. I've also highlighted some more relevant experience at the bottom there. So next up we have Chin Chu. He has over 25 years of investment and acquisition experience. He's a legendary banker, and I actually watched a YouTube video on him. He's the one who orchestrated this deal. I will link that in the description below, but it's a very great video, and they dive deeper into what they're looking for when they are merging with another company.
Organic growth, acquisitions. We look for companies that can improve from a management and operational standpoint, but fundamentally it has to be a good company. This is not a 3 to 4 to 5 year play. It has to have the ability to compound for a long time.
Market leaders in niche markets, companies that have defensible moats around them of one kind or another, a strong management organization, a long history of high free cash flow generation. I like buying companies for cash flows. That's it.
So wrapping up the CCH team, we have Jason Giordano, and he has over 15 years of investment and acquisition experience with a focus in consumer goods and related sectors. So in my opinion, this seems like a very solid team with a lot of great investing experience, and I don't think they would merge with a company that they didn't truly believe in for the long term. So UTZ is pretty much everywhere. They are some of the best among competitors. They're recession proof. Snacks really don't go bad, so in my opinion that's recession proof, and their sales actually show they do better during recessions. People will always snack. There's a wide variety of snacks and brands under UTZ, so even if you don't think you're eating the UTZ brand, there's a chance you are. It's easy, cheap food. That's going to be around forever. They're looking to actually go nationwide, but they're focusing on Florida and Texas to start. Their financial and growth looks amazing. They're overall just well-established company, and it reminds me a lot of Coca-Cola, but for snacks, the way they acquire companies and just how wide of a variety they have. So while researching for this video, I came across quite a few people mentioning that UTZ will be paying dividends in the future. This made me think, would Warren Buffett have any interest in investing in a company like this? I know he's attracted to these kind of value plays. He likes Coca-Cola, Kroger, Kraft, like those types of stocks, and this kind of falls in line with those in my opinion. So maybe in a few years, Buffett, if he's still around, would invest in a company like this, maybe even buy the whole company, who knows. But this will definitely attract more long-term investors, people looking for a 5 to 10 year play, maybe even longer. So that's definitely something to think about. It appears to be a safe play, especially for a SPAC and IPO. So the main positive takeaways that I got from doing this research is they're recession proof, they're very well established, this seems like one of the safest SPAC plays out there. Nice steady growth potential. They do have a nice solid team. Nationwide possibilities. Some negatives, and there's really not many, but I don't think this has meme potential. I don't think it'll blow up like the other SPACs that we've seen this year. This would not be a big money play in my opinion. This would be more of a long-term kind of hold and waited out play. This would probably trade sideways for a while after the merger. And yeah, this would just be a long hold. So my take and price estimate. Right now I'm just going to watch this closely. The merger is coming up likely in September. Pre-merger I could see this fluctuating anywhere from $14 to $16. And then post-merger, my guess would be $18 to $22, and anything above that would just be a really nice bonus for people invested in it. So yeah, I don't see this having the biggest jump, but more of a long play, and I'll personally just be waiting on the sideline and watching this closely. So that's pretty much it, guys. Thank you so much for watching. Drop a comment below your thoughts on this merger, on this company, how many shares, warrants, or contracts you have. Get your free stocks in the description. Please like and subscribe, and have a good one.
Stacking vertical, ooh, counting sideways, ooh, ain't by my cake, ooh, get out my face.